my mind, so I'm happy to start off with him. And
Okay, this is our last push for the event.
yeah.
Yeah, it was so funny. I got that email, and I go, gosh, this, the way it was written, and the fact that it just had this weird link. I go,
But that was on your phone, though, right?
No, it was on my computer.
Oh, the computer, the photo didn't come through at first.
No, it just had like a weird URL.
Because I cut and paste that photo from, and usually when I drop a photo in, it doesn't show up as a link. It's just
the photo. This one didn't show up for some reason.
Yeah.
And so that's what made me nervous.
I came up with a new slide for the slide deck that basically, answers the questions: why do we exist, and why would anybody come to us for a loan?
That's good. That's good. I like that.
So even though that's from a year ago,
doesn't matter.
That's where all our business is coming from. This is reality today. It hasn't changed. So, hey, how are you, man? Good to see you. All right.
We need to reschedule.
Oh, okay.
Just do you have your thing?
Probably. You just want to shoot me like a
Well, we can just do
thingy?
it right now. I just want to.
Okay.
Yeah, we have a couple minutes.
Good.
3:59. Yeah, 4 o'clock.
Perfect timing. Hey, John, how are you?
Well, I'm at a construction site.
Okay. Can you get in an area that has a good cell signal? Because we don't want to drop it in and out.
No, we're not. Your city.
Okay. Okay. Can you hear us okay?
Yes.
Okay. We just want to make sure that we don't hear on your end a bunch of, a bunch of trucks and stuff like that.
Okay, I'm in a neighborhood.
Okay, that actually sounds good. You may remember my co-host, Mark Hahn.
Hey, John.
Hello, guys.
Good. All right. Well, I'll tell you what. Let's since you're available now, let's just get right into it because Mark will ask you some questions and we'll have some fun with it. Okay?
All right.
All right. Here we go. Welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hahn of Pacific Private Money, one of California's fastest growing mortgage investment firms. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during this show. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located about 1 hour northeast of San Francisco. Those vacations are free. Their only request, a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is sports movie trivia. We'll have some fun with that. Our website is bestofinvesting.com. And today we have a special guest. He's been on our show before, John Majalca. Is that how you pronounce it? Majalca?
Yes, sir.
Okay, good. From Texas Cash Flow. John, welcome to The Best of Investing.
Thank you for having me on again. I'm excited.
Great.
So John, you could go to just about any real estate event, real estate investor event in California. You're always going to see people there from other states promoting, investing outside of California, Arizona, Texas, other states. So are you investing in Texas and Arizona right now?
No, I invest in Texas only.
Got it. And so why would someone from California, why should they consider strongly investing in Texas, in the Texas market today?
Well, from my experience, I started investing in Boston, Massachusetts and I could buy a front door for 700 grand.
Yeah,
In San Antonio, with 700 grand, you know, you could buy
the whole state.
maybe 20 houses. So that's the only reason that I live here is, you know, I can buy a really decent house for 100,000.
But then what are the opportunities to be able, there's a reason why it's 100,000. What are the opportunities on something like that?
Well, in San Antonio, Google Fiber is coming in, and so that's booming in the software industry. We do have Rackspace, which is an iCloud company, and they're hiring a lot of people.
Okay.
And we have a lot of medical facilities that are popping up in every corner. I don't know if that's a good thing because we have like high diabetic rate. And then construction, we have tons of construction work happening with road infrastructure, commercial buildings, a lot of apartments. There's just a lot of stuff happening.
So tell us how your program works, because if I understand it correctly, you buy, let's say, this house for 100,000, but you're buying it under market, right?
Right. For example, I bought a building for 80 grand, and I stuck 50,000 in repairs and converted it into a duplex.
Okay, so you're into it for 130.
Yeah, I'm in it at 130, and my rent's gonna be 1,300 each, and I'm almost done.
Wow, 1,300 each. That's great.
So is this, John, a property that you put your investors in, or how do people participate in your program?
Yeah, that was my own personal deal, my own personal cash. But yeah, you know, every week is different. I have different projects every week. But basically, it's just affordable housing, a single family home, one bedroom, one bath, two bedroom, one bath, three bedroom, one bath. Yeah, anywhere from 50,000 to 100,000.
But if I remember also looking, because we've done some business together, you buy a house fairly cheap, you put a little bit of money into it, you sell it, or the other way, instead of just renting, you can sell the house for a higher price, but the benefit is the carry back. Explain that a little bit.
Cool. All right. Yeah, the other program is, I buy a house or an investor partner buys a house. Say, for example, a project that we're almost finished with, investor partner bought it for 30,000. He stuck 20,000 in retail, so we did it at 50. And we're going to list it for 70 to 75,000. 5,000 down, 750 a month. That includes TI.
Okay.
30-year mortgage for at 10% interest.
Okay, so the investor is making in that case, about a 50% profit, but he's not collecting it all up front. He's taking a small down payment and carrying back the mortgage at 10%. So he's got a good investment of 10% interest rate.
Right, cash flow. You get 5,000 up front, and then the cash flow at it.
Okay, now the 5,000 only represents about 7% down. So, would one consider that kind of risky because it's not you're basically having a 93% LTV?
Yeah, not necessarily in the type of property that we're. I have gotten up to $50,000 down, but 5,000 is my normal down payment. I mean, you can get 10,000, 20,000, but 5 is the normal for what I do.
Because the houses are lower end and the buyers they don't have that much cash.
No, yeah, they're not a paycheck by paycheck type buyer. But they're just a dishwasher, a mechanic, a roofer, entry level plumber, entry level electrician, etc.
So they have steady work, but they just don't have enough to put a large down payment. So,
yeah, they make, my typical buyer makes $15 an hour, and then the wife makes anywhere from $10 to $12 an hour.
Okay, so you got two incomes, and it sounds like the PITI is probably less than what they would pay in rent.
Yes, we're about 10% under rent price.
Okay, so what would happen, I guess, is the risk if they default, then you got to go through the foreclosure, which, as I understand, Texas is a little easier than California.
Yes, because we have a simple process. As a matter of fact, I just foreclosed on one of my properties. And I have it back on the market for 10,000 down, 1,000 down.
And at the same price that you sold it before?
Well, I bought that house 10 years ago for 50 grand, and right now I'm selling for 100,000. It's a super clean house. They ran into some medical issues. They couldn't make payments, and I was trying to work with them, but
Yeah.
uh,
How long ago?
all the time.
How long ago did they buy the house from you?
5 years ago.
Wow. So they owned it for 5 years and then they lost it in foreclosure. Wow. I mean, it's kind of a boom to you, though.
They paid me 10,000 down, 1,000 a month, 5 years.
Oh,
Wow.
I mean, it's kind of sad for them, good for
House is
you.
immaculate.
Wow, and they looked immaculate.
So John, how is what's happening in oil affecting the housing market in San Antonio right now?
Sorry, what's happening where?
With what's happening
with oil,
with oil
price?
Oil. I don't really deal a lot with oil type buyers. I deal more with inner city type buyers. For that generational families. So hey, my aunt and my cousin live down the street,
Oh, interesting.
and we're all cooked. Generational cook, generational plumbers. It's primarily Hispanic people from Mexico.
Okay.
Well, and that makes sense because what we hear again in California, we hear, well, the oil states now are going to see housing prices plummet. Yeah, right. But it's just like California. I mean, Texas is a huge state, and many of the oil states are. It's really hard to just make a blanket statement like that. That's almost like saying, well, in California, home prices are overvalued. Well, it depends on what market you're in, and some markets are actually declining right now, and others are still going up 10% a year. So
yeah, wouldn't oil mostly hit Houston and Dallas?
Houston, yes, and Dallas, yes. San Antonio, a little bit. I mean, on the south side of San Antonio, we had a major oil boom. So it'll affect it, but there's just so much commerce, flea markets, hospitals, colleges, parks, recreation, golf courses. I mean, it's going to affect it, but it'll affect your $200,000 to $300,000. Not my little bitty houses. My cook, doesn't really.
He's still going to be cooking.
right, what kind of job growth do you have in San Antonio, John?
Job growth?
Yeah.
It depends on what area of the city you're in. Where I'm at, it's huge. Well, the inner city is pretty steady at 12 to 15%,
Wow.
with a lot of new construction and a lot of road infrastructure.
What's the population roughly today?
San Antonio and surrounding communities, we're about 2 million.
Okay. I knew it was going to be pretty large. Wow. And so, what you're on the show? I guess you're hoping people are going to call you if they want to invest, right? I mean, how do they get a hold of you if they're interested in getting these kind of returns?
Well, they can call my cell phone number, which is area code 210-365-0572.
Okay, and your website is what, texascashflow.com?
Correct.
Okay, that's pretty easy to remember. texascashflow.com, and John will be able to, be glad to answer any questions for you if you're interested in taking a look at his inventory and see what he's got on the market, huh?
Yes, sir. Yes, sir. If I don't answer, leave a message, and I'll call you back personally. I'll have to be able to.
Okay. Well, I've talked to John a few times, and he's a very nice guy. And I got to say that the reason I had him on is because I actually tried this out once, and it was exactly as John said. I bought a house fairly inexpensively. John helped with the repairs, made it very seamless for me, and then I think within 3 weeks sold it for exactly what he said he was going to sell it for. So thank you from the bottom of my heart and the bottom of my wallet.
Right?
Yeah.
Yeah. Cash flow, it works.
It does, and we like to be nice to our listeners, kind of share the wealth. And so again, check out John's website at texascashflow.com, and you'll see the availability, and you can always give him a call. Again, what's your number again?
Area code 210-365-0572.
Great. John, thank you so much for being on The Best of Investing.
Thank you, guys.
All right. Bye-bye.
All right, get back.
Okay, interesting stuff. All right. So
Texas cash flow.
So we're going to cut to our first commercial break here. Before we do, I want to make a couple of mentions. First of all, there is going to be a Neil Diamond tribute and a Frank Sinatra tribute at the Lesher Theater. Now, the Neil Diamond tribute is on February 5th, and the Frank Sinatra one is on February 6th. Old Blue Eyes. Now, he won't be there, but it will be a tribute to him. So check that out at the Lesher Theater in Walnut Creek. You can go online and buy tickets from them. All right, so now we're going to go to our first trivia question here, sports trivia. In the movie Pride of the Yankees, Gary Cooper played Lou Gehrig. Who played Sam Blake, the sports writer who persuades a scout to watch him play? All right? Call 888-912-1190 to answer that question, and make sure to include your name and your email address. And if you're the first email, we will let you know. Or excuse me, the first phone call, we'll let you know. Stay with us. The Best of Investing. I'll be right back. All right. Okay, so we got that out of the way. See that file. What do you want to get into? Oh, by the way, your email question. If the stock market is wacky, won't real estate be affected and your loans more risky? You can ask it another way.
Well, I had figured we would get into that a little bit anyway. So
You want to just start off with it then?
yeah,
Just say, hey, the stock market's been kind of crazy, and we have an email that relates exactly to that.
Yeah.
Okay.
perfect.
I think the staff's excited about the new space.
They are.
It's always good.
Yeah. Gotta get going on it.
Yeah.
So I got meetings tomorrow, then I got meetings on Monday, even though it's MLK Day.
That actually is good because it'll be less busy. You'll be able to get stuff done.
Yeah. Yeah, interesting week for the stock market, right? We'll talk about it. Very interesting.
Okay.
Well, it was a little up a little bit today. At least the last time I looked, it was up
Yeah, it was up.
1.5%, which is about
Exactly.
250 points. So I don't know what it closed at. My app doesn't give me the number. It just for whatever reason.
Let's make a quick mention here for a moment. I got to do these little inner things here.
Yep.
Okay, here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. When we cut to the first commercial break, we asked this sports trivia question. In the movie Pride of the Yankees, Gary Cooper played Lou Gehrig. Who played Sam Blake, the sports writer who persuades a scout to watch him play?
Don't know that one.
Oh, it's Walter Brennan.
Oh.
Remember him, Walter Brennan? He's got that voice. Okay.
Yes, I do.
All right. Now, before we talk about the stock market, we have a quick little note here for the Monarch Cove Inn. We've had them on before. Looking for an idyllic weekend getaway or unforgettable spot to celebrate life's happiest occasions? The breathtaking Monarch Cove Inn stands on a 100-foot cliff overlooking Monterey Bay. Gotta check that out. They have 9 rooms in an alluring Victorian house, as well as 2 cheerful standalone cottages. Each room has its own private amenities. They bring breakfast out each morning. I love that when that happens. And it's on a secluded, quiet road. The Monarch Cove Inn, in a relaxing few minutes, you can walk to charming Capitola Village. Capitola's a great place. Check out www.monarchcoveinn.com. So, Mark, we want to talk about the stock market because it's a little bit wacky.
It's been a wacky week in the stock market.
Wacky
Yeah,
week.
absolutely.
Which brings us to an email that we received here. It says the stock market's kind of wacky. I'm going to paraphrase this. The stock market's kind of wacky. Wouldn't real estate be affected by this? And what about the loans that you make?
Okay. So let's talk about first of all, for you listeners that have a significant part of your portfolio in index or mutual funds or the like. All I can really say is I'm sorry. It's been a really crappy week. I don't have to tell you that. And
$14 trillion of value has been lost since the first of the year. Go ahead.
So, Edward, you and I aren't stock guys. I think you've shared in the past, I know I have, that I don't have any significant investment in stocks or equities. I am really a real estate guy. I like real estate, and I like investing in real estate notes and mortgages. And we talk a lot about mortgage investing here. And so I will say at Pacific Private Money, where we place our investor clients' capital into well-secured Bay Area mortgages, I will say that our phones has been busier lately with people inquiring, including our existing investors, especially our existing mortgage pool fund investors, have been calling about adding to and increasing their investment in mortgage notes. And the reason why is quite frankly, mortgage notes, since banks, since the financial market meltdown and the bank mortgage correction, where bank loans are much harder to get. Privately funded private money loans, also called hard money loans, have grown in popularity. The borrowers, the strength of the borrowers, and the credit scores, and just in general the quality of the privately funded notes and mortgages have gone up substantially, especially in the last 5 years. And we'll talk a little bit, about that as the show progresses, as to what do you mean a high quality mortgage note. So Pacific Private Money, our core business is making privately funded loans. We are not a conventional lender. We're not a bank lender. We don't make bank rate loans at 5%. We are in the business of making, typically loans that people only need for a short period of time. We can close quickly, so we help people get out of a bind where maybe a glitch happened in their conventional mortgage. They needed to close quickly. And we've actually seen demand for our product go up in the last several years. But I will tell you that a lot of people are calling, even the ones that are calling and want to maybe move money out of the stock market. They're really afraid of what might happen this year, or they just have this belief based on a lot of articles in the financial press right now that say, really, lower your expectations for 2016
Sure.
in the stock market. So they're calling me going, well, Mark, I'm really interested in maybe increasing my position with your fund. I've really enjoyed the 8% annualized yields that I've been getting from you, but how does what you guys at Pacific Private Money do, how does your lending market, how is it impacted by the stock market? And I think in a show, maybe it was a week or two ago, Edward, you kind of asked me off the cuff, does this, what's happening in the stock market affect your business? And I think I just said no. I didn't elaborate. We were short on time.
Gotcha.
The answer is not really no. I mean, everything's related to everything
Sure.
in the economy, right? You can't just say, our business model of making short-term real estate loans is completely 100% unaffected by what's happening in the stock market. It is a little bit, and here's one of the ways that it is. So we're in a real estate market now where we've got low inventory and 10% appreciating prices in the Bay Area, and people are fighting over homes. So the housing market's strong right now, and we don't know when it's going to cycle down again. It looks, from most vantage points and most of the articles I read, most people predict that 2016 is going to be similar to 2015, maybe not 10% year-over-year inflation or appreciation average for the year, but maybe somewhere between 5 and 10%.
That's healthy.
But what happens, one of the red herrings in the real estate transactional market is what happens if we have this continued craziness happening in the stock market? What happens if tech stocks all of a sudden take a big hit? What if tech companies stop hiring because now their IPO plans have gone amok? What if people who work in tech, who've been spending money wildly, overpaying for homes, bidding up home prices,
Excellent question.
paying all cash for homes, what if
Yeah.
that slows down and or stops? What impact will that have on the Bay Area housing market? Well, it will have an impact. Is it a negative impact? Well, maybe not initially. If the cash buyers pull out and the tech buyers with high wages start to decrease from the purchasing pool, now all of a sudden the people who've been sitting on the sidelines watching the crazy real estate market, yet they want to get in, but they've not been able to get in. Now they have the opportunity to get in. Maybe it'll transition from what's been now for several years a seller's market to a buyer's market. That's not necessarily a bad thing, and that doesn't necessarily mean that the price appreciation will stop. it means it will likely slow down, and maybe sellers aren't getting their asking price. So there's a transition now. Looking further beyond 27, 2018, at some point we're going to hit a real estate cycle again. We're going to hit a recession. Prices are likely to go down, and again, normal cycle. So really, the stock market and the real estate market are in many forms independent of each other, but like everything in the economy, there is a relationship. There is some correlation. So, what does that mean to investors at Pacific Private Money? What does it mean to me, the broker and the founder of Pacific Private Money? As I plan ahead and I look at my business model and I think to myself, okay, I want to make sure that our business model is sound and that we continue to thrive and grow as a company, because I've got now 10 employees and we're looking to grow next year. We're moving to a new office space. What does that portend for those of us who are in the short-term lending business? Well, here's the thing. No matter what happens in the real estate market, no matter what happens in the stock market, people are always buying and selling homes. Transactions will still occur.
Well, yeah, because when someone's selling, if a transaction occurs, there is someone on the buying end.
Right.
Yeah.
So no matter what the market is, whether it's up, down, or flat, there are real estate transactions happening. They just look different. The numbers and the reasons they're all different. The profit incentive, all that stuff is different. And so we exist to we at Pacific Private Money and companies like ours exist to work with a very small percentage of the real estate transactions. Those that, for many different reasons, don't qualify for a bank financing. Maybe the transaction has to happen quickly. Maybe something happened with the buyer's credit. There's a lot of reasons why someone finds themselves in contract to purchase a home, or maybe they just want to buy a home and can't get pre-qualified, but they make enough money and they've got money in the bank. So those are the people that come to us. And generally, they're not going to keep our loan for very long. We exist to serve a very, very small portion of the real estate transactions.
To me, that is a major part about why investing with you is conservative, is because you do short-term loans, and if real estate market isn't like the stock market in that the real estate market moves fairly slowly.
Right. I mean,
So
10% appreciation sounds like a lot, but that's happening year over year. I mean, it's a real estate market. You're right, Edwards. It's a slow-moving train. And if we're making loans that our average payoff is every 6 months, we're not really exposed to changes in the marketplace in real estate in a big way.
Especially your 70% or less loan to value.
Right. Because let's not forget, the real estate crash took 3 years to happen.
And how much did it, on average, fall? 25%?
Well,
I'm talking about normal houses. Not
well, in
crazy.
Marin and San Francisco, which I don't know if you'd call those normal markets. Let's just say in the Marin and San Francisco and Peninsula markets, the difference between the high of 2006 or 7 and the low of, say, 2011 may have been about 25%. Now, in the outlying areas, the cities that kind of became the outer Bay Area, East Contra Costa County.
Could have been 30, 35%.
Well, anecdotally, I know of some situations where people who were losing their homes in foreclosure had appraisals that were 50, 60% higher than than when they finally lost their house to foreclosure. So it really depends. So the lower end of the market went up much faster and went down much faster. The real crash happened in the lower and middle class markets of real estate, not so much in the upper middle class markets of real estate. But you're right. I mean, the point is that the real estate market doesn't move quickly. Hard money lenders like Pacific Private Money, also known as private money lenders, operate in that niche of short-term lending. Now, not all of them do. Some of them do long-term loans. We just don't. We prefer to do short-term loans, Pacific Private Money. So if you are looking to invest with a private money lending company, it's probably important to know, do they like doing the 5 to 7 year loans? Because there is a market for those as well, but it's a different type of market, it's a different type of product. So we at Pacific Private Money, we thrive doing short-term loans to people who, generally speaking, are extremely strong borrowers, would normally not go to a company like ours except for a special situation, and we are very busy and are thriving right now serving that market for short-term capital.
And you're having, why don't you, before we cut to our break, mention the event you're having next week.
So Pacific Private Money has a mortgage investment opportunity. It's called the Pacific Private Money Fund, and it's open to accredited investors. It's been paying out consistently over the last 3 years of its life cycle thus far, a little over 8% per year. It's both an income fund and a growth fund. You can choose to take distributions or let your distributions compound. So we have an event where we are, in fact, actually the event's sold out. We're taking backup names at the moment here, but Wednesday, January 20th, we have at Piatti's restaurant in Mill Valley, we're doing an event where we're just going to discuss what is mortgage investing and how does the Pacific Private Money Fund work, what type of loans do we invest in, some examples, and why you should seriously consider maybe allotting a portion of your retirement funds to an alternative investment strategy like mortgage investing.
Well, especially with the market the way it is, the stock market the way it is, and the fact that you're consistently paying over 8%, I think it's definitely something worth looking at.
Well, we're going to do additional events during the year. So if you're interested in getting on the list and getting on a mailing list, we don't spam the heck out of you if we get your name and email address, but we do send out some interesting information. Give us a call, 415-883-2150. That's 415-883-2150 for more information on our upcoming event.
All right, we're going to cut to our second commercial break. Here is the sports trivia question. You remember the movie Jerry Maguire?
Yes.
Okay, what team did Cuba Gooding Jr. play for and make a touchdown that appeared to give him a serious injury, only to have him dance in celebration? Okay? The first caller with the correct answer is going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. And don't touch that dial because the best of investing will be right back.
That probably ran a little long on that one.
Sorry. That's the nice thing about not having hard breaks. Yeah. We do the sports show and people are calling in.
Yeah.
I gotta cut them off. Not Jason, he was fine, but some of these people, and it doesn't matter how famous they are, I gotta cut them off. Sorry, Billy Bean, but yeah, we're having Lee Steinberg on next week.
Nice.
Yeah. Which is the Jerry Maguire movie.
That's right.
Oops.
That's so funny. Yeah, I haven't read about him lately. I know that he went through his own personal financial crisis and then reinvented himself.
Yeah. Yeah, we got him on. This is the second time we've had him on. First time we got him on was like literally right after the crisis, and he was on his comeback.
Yeah.
Glad I didn't ride the scooter today.
Oh yeah, it just started to pour all of a sudden.
Yeah. I listened to the weatherman. Better man for it. I'm like dryer man for it.
Dryer man. So we got a couple of new thingies here. That's nice.
Yeah. See, you weren't abusive to yours, so
That's right.
if you want to switch, you can. But I
No,
wouldn't do it
that's
right
fine.
now.
I'm used to these. Yeah. I want to make the girls happy.
Yeah, exactly.
Let's see.
This could have been the one. We should know ahead of time if you ever want to record and tell Kramer. Yeah, something about.
Yeah, what do we want to talk about next? Let's go to.
What do you want to do? Switch the article.
Let's talk a little bit about this
Okay.
this point here. Right. Start out by saying, Mark, you told the audience you were talking a little bit more about the types of loans you were doing. Give a little more detail. Why don't you talk a little about that? Exactly what kind of people are coming to you and borrowing money at 10%.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, one of California's fastest growing mortgage investment firms. Here was our second sports trivia question. See if you know this one. In the movie Jerry Maguire, what team did Cuba Gooding Jr. play for and make the touchdown that appeared to give him a serious injury, only to have him dance in celebration? You know the movie?
I only remember Show Me the Money and
Show
You
Me
Had
the-
Me at Hello.
Yeah, exactly. Okay, he played for the Arizona Cardinals, and it was against
Oh, it was a real team. It
Oh, it
wasn't a
was, yeah.
made-up team.
No.
Okay.
against the Cowboys. Okay, Mark, before I ask you a special question, I want to make also a quick mention here for the Meritage. You deserve it. A luxurious getaway in the Napa Valley, the Meritage Resort and Spa boasts world-class luxury. Stroll across acres of hillside vineyards. Enjoy award-winning cuisine, relax in the estate cave as you pamper yourself. And you can meet friends in the Crush Ultra Lounge. They got 6 bowling lanes, those rascals, and sports entertainment. Make reservations now for special winemaker dinners, the holidays, and Masters and Makers at Meritage. Visit meritageresort.com for details. Now, Mark,
So what I want to know before we go on is that the estate cave anything like the bunny cave
at the mansion.
the mansion, which I hear is on the market now.
Oh, that's right. But you know what part of the restriction is? Half gets to still live there.
Right, he gets a life estate to live there for the remainder of his life.
Yeah, that would be
Apparently his
interesting.
bedroom is off limits.
Okay, so I'm going to buy this house, and oh, by the way, half comes with it. What is it, like an old dog or something?
I don't think there are going to be many buyers, but who knows?
Who knows? Unless people assume that when you buy him, you get a lot of Playboy money's coming.
Yeah.
Okay, so Mark, before we cut out, we were talking about the types of loans that you're doing, and I'm wondering who would pay 10%? Because that's your average price that you charge a borrower.
It is. I'm realizing that I didn't mention that during the last segment, that the types of short-term loans we make at Pacific Private Money are on average at a note rate of around 10%. And of course that compares to bank financing between 4 and 5% for most borrowers. And so the question we get a lot is, who on earth would pay 10% for your money? Well, this guy might not pay 10%, but I've got a picture here, a photograph of Ben Bernanke, the former Fed chairman, and this was from an article from a year ago that says, it's a tough market when Bernanke can't refinance. And Ben was quoted at a meeting because he actually shared this experience that he got turned down for a refinance, and he was quoted as saying, "I think it's entirely possible that lenders may have gone a little bit too far on mortgage credit conditions."
Now, is the reason because he retired and so now they were looking and his income was going to be down?
That's exactly right. He changed jobs. He went from having a cushy W-2 monthly paycheck to being self-employed consultant. Now, while he was making large fees, I still think the bank, whoever was his mortgage broker, shame on that guy, because
I think they had it in for him.
a guy like him not being able to refinance his mortgage. But here we live in the Bay Area, where a significant, in fact, probably larger than maybe any other metropolitan area in the country, we have a huge percentage of people in the Bay Area who are self-employed. And I know that because I get the tax returns of a lot of my borrowers, and what's funny is many of them are self-employed, and what's also kind of interesting is according to their tax returns, most of them don't make any money. But I look at their bank statements and I see lots of money going in and out, and I know they can afford to pay it, but with the banks nowadays, where 10 years ago you got a bank loan based on your FICO score and lying about your income, and they didn't check tax returns. It was basically, there was no obligation on your part to prove that you were actually making the money that you stated on your loan application. Well, today you absolutely have to prove that you earn the money, and you have to show tax returns and bank statements and all that stuff. And if your tax returns show that, or indicate that it doesn't look like you make a whole lot of money, the bank is not going to make you a loan. And so that's a reason why, the example we just used about Bernanke was he was trying to refinance his house. Now, most people don't come to Pacific Private Money to refinance their conventional loan. No one's going to refinance from a 4% loan to a 10% loan unless the
loan came due.
The loan came due, or they need several $100,000 and they're going to pull some equity out of their home because they have a business use, usually, or they want to invest in other real estate. And surprisingly, that actually happens quite a bit. But most of our transactions in Pacific Private Money are purchase transactions, and there are people not unlike Ben Bernanke, people who make a lot of more money or made a lot of money and changed jobs recently, which banks hate.
I got a new one for you. You and I hadn't talked about this, so I'm going to spring this one on you.
All right.
The borrower owns real estate, has owned the real estate for 20 years, has steady income from that real estate. The tenant just got more space and is going to get even more space come September at a higher rate than the old tenant. So the borrower is going to have higher income for sure. The bank is saying, we will not consider September because it's in the future. We're only looking at how much income you have from the building today.
And I don't think that that's that unusual, and that's really a shame. You're not allowed to look at future income, and of course, companies that lend privately don't have those types of restrictions and can look at stuff like that. But moving on and giving another example of someone like Edward. Of course, you remember you and I worked on this deal together, where a new Apple executive, he was a recent hire within 12 months. Came to us for a short-term bridge loan so he could buy a property. And we were just amazed that someone who was making over $1 million on his pay stub
and was only
annually,
borrowing less than $900.
right, and had stock options totaling between $4 and $6 million of value on an annualized basis, would be coming to us to borrow money at 10% so we could buy a home for himself. And and it was an interesting. There was actually several aspects of this borrower that were interesting. But this guy had stellar credit. He was actually relatively high up the food chain on the executive branch, and we were able to help him. Of course, we were, because he was just a stellar borrower. Right? People investors falling all over themselves to invest in this loan. But there were a couple of reasons why the bank said no to him. One was he was a recent hire at Apple. That was number one. Even though he was being paid $1 million a year.
Well, back up. That, as I remember correctly, prior to being a new hire, he made $900,000 a year at another big company. So it's not like this guy just came out of school. And,
Right.
He had a history of making a lot of money.
So new hire at $1 million. His stock options were known as warrants, and they had no liquidity value, so the bank didn't consider that as income.
They were going to be liquid, but not for another 6 to 9 months.
Right, exactly. And third, and this one, I think even without this fact, he may have had trouble getting a bank loan, but maybe not. He was going through divorce.
They don't like that.
Yeah, and the divorce had not been settled. There was no settlement agreement. They didn't know what the final amount of alimony was going to be, and so banks don't like uncertainty. So, you might think that's an extreme example, but it's really not extreme in terms of the types of applicants we've seen with strong FICO scores, strong balance sheets, good income, but something unexpected happens, and what's particularly unexpected is the bank says no, and we can't do it right now, or maybe come back in 6 months when this thing has aged off of your credit report.
And most borrowers don't have the luxury of waiting.
Exactly.
They have a non-refundable deposit up.
So that's one, and then there's another one, and we've talked about this a lot on this show. Is a lot of people now don't realize that you can't just go out if regardless of whether you have a lot of money in the bank and you've got good income and a good credit score, you want to move. You want to move up, you want to move down from your current residence. Well, in today's market, most people would prefer to buy the target home that they're going to move into first before they sell, because who wants to sell and then live in an apartment or a hotel and then hope they get the property they want? In a competitive market, that's nuts. No telling how long it's going to take you to buy that next home, right? So they go out and they're making offers, and they know they can't make offers contingent upon the sale of their existing home. So they make offers believing that, well, I'll just get a bank loan to close. I'll have 2 bank loans. It won't be optimal, but I'm going to go ahead and sell my house. It'll sell quick.
Yeah, no problem.
Then the bank they find out the bank says, no, I'm sorry. I know you make a lot of income, and I know you got great credit. I know you got all this money in the bank, but under current regulations, you don't qualify to have 2 mortgages simultaneously. of the size that they're contemplating, which in the Bay Area might be two $1 million mortgages at the
Well,
same
and
time.
as I understand it, tell me if I'm wrong, but what they're really scared of is upon audit, if a bank examiner sees that they made that kind of a loan and they weren't supposed to, they got a big price to pay.
Well, again, I don't, I'm not an expert on bank audit, so I don't really know. I mean, you may be right on that, but I've always been led to believe in the last couple of years that the inability to get a second home loan is really predicated on the fact that when you add up all of your obligations, you would, under that scenario that you're proposing to the bank, which is, hey, let me buy this house we want to move into now, and then I'll sell the other home right away. Yeah, for a few months I might be double paying the mortgages. Well, they have to look at that as if that's going to go on forever, and so they add up the mortgage payments and all your other debt coverages and come up with a ratio. And if that ratio is over 43%, meaning you're spending more than $430 per $1,000 of income, then they're going to say no. And that debt ratio requirement is something that's new under the Dodd-Frank restrictions of the last couple
Well,
of
and I
years.
was talking to a banker, and one of the things they're scared of is if they make that loan, then when they sell off that loan, which a lot of them do, so either A, an examiner comes in, if they pull that one for audit, so to speak, they can be in a world of hurt. Or if they put that in a portfolio and sell it, then they have to buy it back. If anything goes wrong, it gets really, really squirrely. So the bank regulations, it's not that they're just trying to be like, we don't just want to do it. They are so restricted now because of the banking crisis that happened in 2007 through 9.
So we're basically saying, talking about that bank mortgages and conventional mortgages are much harder to get than they were 10 years ago. A surprising number of people find themselves unable to close a real estate contract with conventional financing, and oftentimes they don't find out that reality until the last minute. They may already have put a deposit down on the purchase. That deposit may have gone non-refundable. It's also called going hard. Unrelated to hard money, a hard deposit basically is an unrefundable deposit. I've had many people call saying, I've got a $50,000 non-refundable deposit. If I don't close by next Friday, I'm going to lose it. Can you help me? And many, many times, we at Pacific Private Money can in fact help them with a short-term loan. And what's nice about our loans is that most of them have no prepayment penalties. So if we help someone buy a home because they want to buy the target house now and sell their existing home later, they can pay us back in 6 weeks or 6 months. We write those loans for 11 months. We call it our 11-month bridge loan program. Why 11 months? Well, regulations state that we can do interest-only short-term loans as long as they're considered temporary. And temporary in the government definition is anything that's less than 12 months, less than 1 year. So we make it for 11 months, so we fall within the regulations. And so anyway, the purpose of talking about this for the last 5+ minutes is really to say that when you consider mortgage investing or mortgage pool investing with a company like Pacific Private Money, we are not your father's hard money lender. We are not the hard money lenders from 10, 15, 20 years ago, many of whom were the lender of last resort to people who are in some form of financial distress and were just borrowing against the equity of their home willy-nilly, knowing that they would, might not be able to actually pay that loan back. We don't make loans to people who don't have what we call a reliable and believable exit strategy. In other words, we make loans and then we go, how are you going to pay this loan back? We don't make 30-year amortized loans. We don't make 20 or 25-year amortized loans. We make loans with balloons on them, and we expect them to be paid off in a short period of time. And they do. That's exactly what happens. We have such a low rate of default on our loans. In fact, right now we're servicing over 200 loans in our loan portfolio, and I believe only 2 of them are in default. And while we have to file a notice of default every now and again, it almost never goes to the courthouse step auction. Usually they either sell the property, we give them an extension,
Another hard money lender takes it out.
somebody else pays us off. Yeah, so these are not the risky loans that hard money lenders used to make. We are a legitimate business with a legitimate business model. Yes, it's expensive money, but that's just the nature of private money throughout the United States. Private money costs between 10 and 12% on average, generally throughout the U.S. In some states, it's even more than that. But California, in the San Francisco Bay Area, short-term money that you can get by next Friday is generally going to cost you between 9 and 10%. For more information, check us out at Pacific Private Money, pacificprivatemoney.com, or 415-883-2150.
All right, this hour's going fast. Here's our third and final commercial break trivia question. Sports trivia. How many and which major characters died in all of the Rocky films? All right, 888-912-1190. To answer that question, also want to make a special mention here for our friends at Pacific Trade Exchange, which is a business-to-business barter exchange. Check them out at pacifictradeexchange.com. You'll see what I mean. Stay with us. The Best of Investing will be right back. Okay, that's a long one.
Didn't feel long.
No, that one didn't feel it, but it twirled.
I don't feel tardy.
Yeah. Don't feel tardy?
That was Van Halen song. Teacher.
Oh,
Hot for teacher.
Oh.
I don't feel tardy.
I woke up so early to go to that thing today.
You know,
You're
tired. I was driving down here and the rain's pouring down, and it just kind of got mesmerized. And I actually started to get. I was so glad I was not driving 50 miles or something. I was literally starting to get drowsy. It's like, oh, this is so nice. I can get up every morning at 6. I hate it. I'm not a morning person.
What time do you usually wake up?
6. That's,
6. Oh, okay.
We got 6 o'clock. Rock goes off, and it's been like that for years because I've always had to. My part has always been I got to drive the girls to school. Lisa, we both get up at the same time. At least I get to drink coffee and read the paper for 30 minutes because I literally feel like almost ill by getting up that early or getting up in the morning, and I need time to kind of wake up and let the coffee kick in, which usually takes 20 minutes. So,
Gotcha.
And then Lisa makes lunch, and and then I run and grab a shower and get dressed, and we're out of the house at 7:30. So it takes an hour and a half to get through all that.
How much time we got left?
3 minutes.
Yeah.
Good. All right. That's cool. All right.
What do you want to cover?
Let's see. Let's talk more about the event.
Oh yeah. Yeah, here we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Plum, president of Pacific Private Money. Here was our third and final commercial break trivia question. How many and which major characters died in all of the Rocky films?
I couldn't do the math during the short time during the break.
Who do you remember?
Who
died? Who died first? His trainer, Burgess Meredith,
right.
Mickey.
Well, did
Rocky
Mickey
3.
die? Oh, okay, right.
He died in Rocky 3, and then who died in Rocky 4?
Creed.
Apollo Creed. Okay, and then was that it?
I don't know that I watched the later ones.
Oh, okay.
In Polly.
No, Polly didn't die, but in Rocky 6, which they just called Rocky Balboa, Talia Shire, who played Adrian, was already dead. They knocked her baby off.
And the answer's 3.
The answer's 3.
All
right, Mark, we have a quick minute. This is a fast one. Talk about the event again.
Right, so we're Pacific Private Money puts on regular events during the year to teach people about what mortgage investing is about. And mortgage investing includes mortgage pool fund investing in a fund where your money works independent of the various mortgages that are in the fund, and also individual note investing, also called trust deed investing. So right now, the event that we have scheduled for Wednesday, 7 p.m., January 20th, upcoming at Piatti's Restaurant in Mill Valley. Right now, that event is sold out, but we will be doing follow-up events, and we're also moving into our new larger office space in March in downtown Nevada.
But can people still sign up for this one? Because you know how it is.
Well, I got an email that we're using Constant Contact's meeting service, and it does return a reply that it's full. So,
okay.
Gotcha. But give us a call, and we'll put you on our list for the next one. 415-883-2150. That's Pacific Private Money.
Very good. Here's our thoughts for the day. Of course, we're talking sports on our trivia. Yogi Berra said, "If fans don't come out to the ballpark, you can't stop them." Okay. And Bobby Jones said, "Competitive golf is played mainly on a 5.5-inch course, the space between your ears." Words of wisdom. Tune in next week to the Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Good. It was fast.
Yeah, that was a nice one.
It's like when you're listening to KNBR and if you happen to